Good afternoon. This is Chris Brecher with Simpler Trading's free futures video for April 20th, 2022. What am I going to show you in here? The thing that I probably bore everybody to death to go over and over. But the number one thing of how I trade for 40 years is overall market perspective. My first one is the bond market. So I know there's so much noise with news and the Fed and all that. But the key to me is interest rates, especially if I trade the NASDAQ. Why? Because the NASDAQ 100 stocks, a tremendous amount of them have high price sales and high price earnings. Those spreads, those actual numbers contract the higher interest rates go, or the lower bonds go. So that's why the NASDAQ is correlated so well with the bond market in the last year. So this is what I want to show you. Number one, a lot of people ask, well, how come the NASDAQ went up? Back here, if I zoom out, why did the NASDAQ go up here if the bond market went down? That's because in the cycles of thing, in the grand scheme, it's interest rates low, stock market up. But this is how it works after a recession. After a recession, the first move down in the bond market is because the economy recovers. So that's from economic strength. That's why that can temporarily sell off in this rallies. But it was the second sell-off, the second one after the strong economy, that was the inflation scare that really put a damper on any further rally in the NASDAQ. So this is from January 22. The reason I have these bubbles is because of this. So the 2022 bond market sold off, NASDAQ sold off. Bond market had that rally. Actually, that's right here. Stock market had the rally. Bond market had that sell-off, that ugly sell-off right here. All the way to October. So this rally in the bonds was equivalent to this rally in the NASDAQ. This sell-off in the bonds was equivalent to this sell-off. But this is where it gets really interesting. So the bonds had a little twerk lower, not near the low, but a little twerk lower at the beginning of the year. But the NASDAQ overcorrected. Remember, the NASDAQ is the one that's most affected by interest rates. And that overcorrected, boy, I can't say corrected very well, I'm sorry about that, and tested the October lows. What that generates is a positive divergence. What I mean by that is the bond stayed up here while the NASDAQ stayed down here. So it doesn't take much good news for the NASDAQ to get propelled higher, which is exactly what happened. Bond market stuck in the mud. NASDAQ had an absolute massive rally of 2,200 points. Now the opposite's happening. The bond market is still at this red dot right here. Really, back here in January 17th. On the other hand, the stock market, or in this case the NASDAQ, is all the way at these August highs. So now you have the opposite. You have a negative divergence, and it won't take much for the NASDAQ to sell off unless the bond market starts rallying. Now, what would make the bond market rally? Well, number one, it has to get over this kind of pattern. If it can get over this, as you see, it's failed miserably so far. Heck, maybe it gets up to here, and then you don't have as much a negative divergence. So this is the other thing you have to watch. How do you game the system? How would you know if the bonds are going to break up or down? Well, the first thing to do, and I'll show you with Think or Swim, because I don't know the symbol on TradingView, is this, the Dow Jones Commodity Index. So long-term bonds hate inflation. So if you go put up a daily chart of the bond market, and you see the rally, and you see the sell-off in the Dow Jones Commodity Index. On the other hand, you see the rally in the Dow Jones Commodity Index, and then you see the sell-off in bonds. Now, that doesn't mean the bonds have to get destroyed. What it means is the probability of the bond market breaking up. That's the same chart I showed with TradingView. The probability of a follow-through to the upside goes down dramatically if this is going up. But why did we buy TLT yesterday? We bought TLT because of this. I'm going to put it on a 15-minute chart because the Dow Jones Commodity Index got absolutely hammered. So all of a sudden, there wasn't a reason for the bond market to go down anymore. And sure as heck, the bond market had a good rally. So, very impressive. So what's going to happen now? Well, it's all on how the Dow Jones Commodity Index how it acts towards support. So I'm always talking about how things go to support and how they work off support or resistance. So right now, the Dow Jones Commodity Index is oversold temporarily. So if it gets in this zone on the left and has that another 10-point to 20-point move down, heck yeah, I think these bonds could go higher. Where could they go? Well, let's put 4-hour chart so you could get a better read of what could happen. So if you see this Dow Jones Commodity Index on the left get down to these zones, which is where it was at the beginning of the month, right in here, definitely you could get this to test the highs. Definitely you could get that to test the highs. As you see, rally here, sell off here. Sell off, not enough of a sell-off to propel this up to the upper echelons. So that's what we're going to be watching the next couple of days. So we're going to start with the Dow Jones Commodity Index. Then we're going to look at the bond market. And then we're going to see if the bond market can repair some damage, which would keep the NASDAQ from absolutely getting hammered. So that's what we're going to be watching the next couple of days. In the grand scheme of things, the NASDAQ looks like a real topping formation to me, with all these indecision candles, as you see on the upper right. To me, you could call them dojis, indecision candles, and the key is how they follow through. The idea of this following through to the upside goes down dramatically if these bonds fail to rally. So, first thing is the Dow Jones Commodity Index. Next is the bond market. And then you have this. So if the bond market gets crushed, yeah, this is more likely to break that bear wedge to the downside. That's how we're going to lean the next couple of weeks. Hope you enjoyed the video. Take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me